Mr. Ajay Singhal, the CEO, and Madan Mohan Lohia, the Senior Vice President of Nukleus Office Solutions. Ajay, coming to you first, tell us a little bit about the company, give us a little details and what is going to be the mobilization or the allocation of the IPO funds that you are raising.
Actually, Nukleus is a company in the flexible workspace, and we are a managed office solutions provider. The proceeds of the company of the IPO are going to be used primarily for expanding into other markets, and we are planning to open new centers in tier 1 and tier 2 cities and expand almost 50 to 60% using the proceeds from the current capacity of around 150,000 square feet. We will be adding another 100,000 square feet in at least 3 to 4 other cities.
All right, Mr. Lohia, coming to you now, give us a sense that which geographies are you looking to expand and which cities are showing good potential. Also, could you shed some light on the demand trends?
Currently, we have a very strong hold in Delhi NCR market with 11 centers, co-working and managed offices. And we are looking for expanding to high potential cities such as Bangalore, Pune, one of Ahmedabad or Vadodara, and Indore. And we are also seeing that very strong demand trends, not only for from startup, small entrepreneur, but from the established companies as well. Additionally, with India emerging as a strong hub for GCC, we also intend to take advantage of GCC environment and normal co-working and managed offices, sir.
Okay, point taken. Mr. Singhal, coming back to you, the managed office business is a very strong feature in your portfolio as well. Could you share some details on this and where this segment is headed going ahead?
Yeah, sure. Actually, managed offices are the situation where we are providing a single client a large work area, and it is completely customized as per their requirement. These are typically long-term leases up to about 9 years period, and we are similarly having our leased premises on a back-to-back basis. So this provides a steady revenue stream and provides a backbone to the growth of the company. The predictability is very high in this, and this is also one of the strengths that we get for expanding into other regions. Our existing managed office clients, they are expanding into other regions and they are asking us to move into those areas as well.
But Mr. Lohia, Global Capability Centers, or rather GCC, that's the new buzzword, and we have seen a lot of these MNCs coming up and showing interest for that and looking to make a setup in India as well. Give us a sense that what is the growth for coming from this particular sector? What's the opportunity looking like?
On the GCC business, sir, our understanding is that India has already established itself with, we believe, about 700 GCC centers are already there. And approximately 2 million people are engaged in through this, already generating approximately $65 billion for country. And our understanding is that by 2030, GCC centers should be about 2,200, 2,300. And this revenue would double by 50%, not double, would at least increase by 50%, crossing $100 million. So we see that there would be a greater synergies between our offerings and the requirement of the GCC centers in India.
Okay, Mr. Lohia, but once again also shed some light on how many seats the company has right now, what's the inventory and what kind of expansion plans are in place after the IPO has gone through.
So, sir, we already have about 2,800 seat counts, and this is spread over 7 co-working centers, all predominantly in Delhi NCR as of now, and 4 managed office offices for our clients, large clients. And with the money which we are securing from IPO, would be adding approximately 1,400 odd seats in 12 to 15 months. And in a way, this would be leading to 50% increase in our capacity.
Okay, while we're talking about capacity, also shed some light on the occupancy. What is the current level and what kind of growth can we expect when it comes to your occupancy levels?
So, sir, as on date, out of those 2,800 seats, my occupancy level is about 89%, approx 90%, we can say. And as we grow and open more centers, especially with the money coming from IPO, initial 12 months in a life scale cycle of any center, you normally reach 50 to 60% of your occupancy level. Having said so, once what we call the matured centers with a 12 months plus occupancy, our target is that we must achieve 85% soonest possible. And the challenge for team we set is that we must try to surpass a level of 90% of the occupancy so that we are not only highest in the turnover, but in our profitability also, we remain high among our competitors and vis-a-vis our past trend also.
And lastly, Mr. Singhal, coming to you, you did give us a bit of a sense that what the company is into and what is the business model looking like, but also help us understand that what is the growth outlook for the next 2 to 3 years and what value creation can we expect?
We are having a vision to grow innovatively and keep on offering our clients something extra. And we are looking forward to a good growth rate, higher than even the current growth rates, and keep on giving additional value to the people who get associated with us over a longer term. Uh, to demonstrate the confidence into the business model, the promoters have also decided to put in a significant portion of the fresh issue of equity, and we are confident and very solid foundation is there to continue to grow and add value for the shareholders.